Good morning, everybody, and this is your Dow Jones day trade setups for today. So the moves to the downside continued until we got to 31,487, and I just want to just pop across to the weekly because that is where that level is, and you can see there is the cluster. In actual fact, I could just move it onto the fractal there, the weekly fractal. That's pretty much what we tagged. So it's 31,365. These weekly fractals are pretty important. It's always it's always worthwhile just paying attention to them. So if this continues today, and let's just get down to the 8 hour. So if this inside bar gap up breakaway bar here continues, and let's say we get another one, we close up in this area of 32,200 or 32,300 area, that is going to give us a weekly pin bar, pretty much same structure as what's been going on for the last 12 months at the moment. I just bear that in mind. We have broken below this trend line that was looking at nothing's impossible that we end up with a green pin bar on the weekly above that trend line, and that would be pretty bullish. But as I said earlier, that there has been a very bullish pin bar which just didn't materialize either. So inflation is driving fear at the moment, and that is what's happening. But you can bet your bottom dollar that there are people out there that are looking at stocks which were way too expensive in the past, that are looking really cheap now, that are going to start investing in those stocks. I'm one of them. So I've already started accumulating some stocks for a long-term portfolio, and looking at stocks that have just been hammered properly, and applying the same strategy pretty much, but on the weekly and monthly charts. Anyway, at the moment, inside bar, gap, bit of a runaway here. I think what you need to pay very close attention to is the first trend line. So that's going to be there. So you can see that was the trend line there. So this level here is the one to pay attention to, and that is the long term, the weekly diagonal trend line. So make sure we're all on the same page. It's this one here. See? That's the one that we've broken through. That's the one that I expect us to test, which is right here. So let's just drop down to the hour. So at the moment, you can see pretty much all over the place, although drifting lower yesterday. Then we had that massive engulfing bar. A big question is, was that buyers coming into the close of the market? I doubt it. Probably more than likely bears that have taken profit. It's kind of happening more often than not towards the close of the market. So that could be the case. We have at this stage, I'll put another level here, broken above yesterday's high. So that becomes a level we need to pay attention to, because if we can stay above yesterday's high today, that gives us sort of gap up and breakaway. So it'll be a breakaway gap, in other words, if we've got a solid green bar here. So that would be fairly bullish. But at the moment, there's no confirmation for me. So the oscillators are also indicating that we need to be a little bit cautious. We're heading up into overbought territory. But yeah, we just come down to the 15-minute rather. Let me just get all of my ducks in a row here. So what I want to show you here is 1%, 1.3% up, 1.3% down, almost 1%, 0.7% up, then 1.4% down. So that's just continuation from the rest of the week, which is just absolute confusion. Okay, lastly, just on the 15-minute, pay attention to this gap. If we do pull back, which is possible, looking like a bit of an exhaustion bar here for me, if we do pull back and find some support at the gap, which is down there, and we could drop a little bit lower than the gap and pick up one of these tails here, that could also be an indication that we need to look at an opportunity to buy. So not sure what's driving this at the moment. Something must have happened yesterday going into the close, because I mean that's a 1.5% gain, and at the moment we are pretty much up 2.5%, which I suppose, in looking at what's been going on the last couple of weeks, that's nothing. A 2% swing can happen in 5 minutes. So yeah, I'm still very cautious on this. I think all these levels above here would need to be broken before I start looking for sort of longs out of this. So at the moment, it should still be a situation of looking for rejection and for a move to the downside. I think the most logical place is going to be up here at 32,313, but I'm extremely cautious. I was really, really cautious. So if we do get this level and we form some form of a pattern, I'm looking for a really tight stop loss on that pattern. So if it's anything more than 150 points, I'm not interested in taking that trade. So this could be a situation of building a base, and the time is going to come soon where buyers are going to step in. Pretty much on the higher time frames, the trend is still very much up. So if you look at the weekly and the monthly, trend is still up. So you're going to see macro traders that are going to trade that and not worry about what's going on at the moment. Anyway, so for me, really cautious. Pay attention. We do get a pullback. Pay attention to the gap here at 31,700. If we can hold that, great. There would be an opportunity to continue. If it runs away and we get like a V reversal here, then pay attention to this area, which is 32,321. You probably get a rejection there. That's sort of the area that I'd be looking to short off. But if we get above that, and we don't get above that and start forming a base on here, so often what happens, it breaks and it just runs along it. All bets are off. I'm not looking for longs or shorts. I'll wait for the next bit of structure before jumping in. But that is the logical trade. It's with the trend. It's up here. But anything can happen, and the way it's running at the moment, I'd be a little bit cautious. There's obviously something brewing in the market that us little retail traders don't really understand. Anyway, that's me for today. Hope it helps, and we'll catch up with you on Monday morning. Enjoy your weekend. Cheers for now.